What's up, crypto family? Right now, as I'm recording this, Kaspa is sitting at a knife's edge at just under 10 cents, and what happens in the next 24 to 48 hours could determine whether we see a massive breakout to 14 cents, or, honestly, a brutal crash back to 8 cents. The whales are making their moves, diamond hands are accumulating like crazy, and the technical setup is absolutely loaded with potential. But here's the thing, 95% of traders are about to get this completely wrong. Stay with me because by the end of this video, you'll know exactly what the smart money is doing, why this pullback might be the best thing that could happen to Kaspa holders, and the 3 specific price levels that will make or break Kaspa's next major move. Alright, let's dive straight into what's happening with Kaspa right now because this setup is absolutely fascinating from a technical analysis perspective. As of July 25th, Kaspa is trading at just under 10 cents, down about 4.62% in the last 24 hours. Now before you panic, let me paint the full picture here because what's happening beneath the surface is way more important than that red candle you're seeing. Here's what went down. Kaspa finally broke above that stubborn 10-cent resistance level that had been holding it back for weeks. But here's where it gets interesting, and this is data that most YouTubers aren't talking about. According to on-chain analytics, this volatility actually shook out the weak hands. The number of wallets that have been inactive for over 3 months just dropped from its all-time high. Translation, the tourists are leaving the building. Meanwhile, and this is crucial, wallets holding Kaspa for over 2 years have reached a new all-time high, now controlling 13.5% of the total supply. You know what I always say, watch who sells and who doesn't, it's often more telling than the price itself. And right now, the data is screaming that the smart money isn't even thinking about selling. From a technical standpoint, we're sitting just below the 9-day moving average which has been acting as dynamic support during this recent rally. The price hit that critical 0.115 to 0.117 resistance zone earlier this week, the same area that's been rejecting buyers since late 2023 and couldn't punch through. Now here's where things get really spicy, and why I'm so focused on the next 24 to 48 hours. Kaspa is sitting at what I call a make or break level. We're testing short-term support right at the psychological 10-cent level, and the market is basically asking one simple question. Are the bulls strong enough to hold the line? Let me break down what's really at stake here. After that solid run-up from late June, and we're talking about a move that took KAS from around 8 cents to over 11 cents. The rally is starting to show signs of exhaustion. The volume is cooling off, momentum indicators are flattening out, and that long-term downtrend line from late 2023, yeah, it's still holding firm like a brick wall. But here's the plot twist that most traders are missing. Sometimes the best setups come disguised as weakness. So, yesterday, I called out that if Kaspa couldn't break above 12 cents, we'd likely see a pullback toward the 9.9 to 9.3 cent zone. And well, guess what? That's exactly what happened. KAS got rejected at resistance and dropped over 4%, slipping right under that crucial 10-cent psychological level. The question now is whether this is just a healthy retest of support before the next leg up, or if we're about to see a more significant correction that could take us down to much lower levels. Looking at the technical indicators, we've got some mixed signals that are creating this perfect storm of uncertainty. The RSI is sitting at 60.15, still in bullish territory but not overbought, which means there's room to move in either direction. The ADX is showing very strong trend strength at 60.58. But the MACD is starting to flatten out even though it's still technically bullish. Here's what's really keeping me up at night. The ultimate oscillator is at 54.79, still positive but showing signs of deceleration. And the bull-bear power indicator, it's barely holding positive at 0.0078. That's like holding onto a cliff by your fingertips. The market is basically sitting on a powder keg right now. One strong move in either direction could trigger a cascade of buying or selling that completely changes the game. Alright, let's cut through the noise and talk about what's actually going to happen next. I've identified 3 distinct scenarios, and I'm going to tell you exactly how to position yourself for each one. Scenario 1. The bullish breakout. If KAS can reclaim and hold above 12 cents with convincing volume, we're looking at a potential rocket ship to 13.5 cents or even 14 cents. This would break that stubborn downtrend line that's been in place since late 2023 and could trigger a massive short squeeze. The key levels to watch 12 cents needs to flip from resistance to support, and we need to see volume expansion on the breakout. If that happens, the next major resistance doesn't come until 14 cents, which represents about a 40% move from current levels. Here's the smart money play for this scenario. Wait for the breakout confirmation above 12 cents, then look for the retest of that level as support before entering. Don't chase the initial move, let the market prove it can hold those gains. Scenario 2, the sideways grind. This is actually the most likely scenario in the short term. Kaspa could easily float between 9.9 cents and 10.5 cents, just chopping around until we get a clearer signal from either Bitcoin or the broader crypto market. In this scenario, the market is basically in price discovery mode, with neither bulls nor bears having enough conviction to make a decisive move. This is where most retail traders get chopped up, but it's also where patient traders can accumulate at good levels. The play here, use the range to your advantage. This isn't the time for YOLO plays, it's the time for disciplined range trading. Now if we lose 0.099 support with volume, things could get ugly fast. The next major support levels don't come until 0.093, 0.090, or even 0.080, where we have that significant higher low from the previous cycle. This is the scenario that would shake out even more of those medium-term holders and potentially create an amazing accumulation opportunity for long-term investors. Remember those 2-year holders who now control 13.5% of supply? They didn't get there by panicking on 20% pullbacks. So, the smart money approach here is pretty straightforward. If we do see a breakdown, you really don't want to try to catch a falling knife. Instead, wait for some clear signs of stabilization and accumulation at those lower levels before, stepping in with any real size. Alright, here's exactly what I'm monitoring over the next 24 to 48 hours. And honestly, these are the same levels I'm sharing with my premium community. That range between 0.099 to 0.100, that's the line in the sand. If we can hold here with decent volume, then the short-term uptrend stays intact. But if we lose it, well, we're probably heading lower. I really need to see how the market reacts at these levels. If there's a low-volume breakdown, it's probably just a fake-out. But if we get a high-volume rejection of support, then it's definitely time to step aside and wait for better levels. The 9-day moving average is currently sitting right around our current price level. If KAS can reclaim and hold above this dynamic resistance, it suggests the bulls are still in control of the short-term trend. The beautiful thing about this setup is that we're going to get clarity soon. The market rarely stays compressed like this for long, and when it makes its move, it's usually decisive. For those of you asking about my personal position, I'm keeping my long-term KAS holdings because the fundamentals and on-chain data still look solid. But I'm not adding to my position until we get a clearer directional signal. Look, here's the bottom line. Kaspa is at one of those inflection points that separates the experienced traders from the rookies. The rookies are panicking about a 4% pullback, while the experienced players are patiently waiting for the market to show its hand. What I love about this setup is that it's giving us multiple ways to win. If you're a swing trader, you've got clear levels to work with. If you're a long-term investor, you might be getting a gift in the form of lower accumulation prices. And if you're sitting on the sidelines, you're about to get a crystal clear signal about which direction this market wants to go. The key is patience and discipline. Don't let FOMO or fear drive your decisions. Stick to your plan, manage your risk, and remember that the best opportunities often come when everyone else is uncertain. If this analysis helped you navigate today's Kaspa action, go ahead and smash that like button. And let me know in the comments what scenario you think is most likely to play out. Are you team breakout, team sideways, or maybe team pullback? And hey, if you want to get these insights before I post them publicly, make sure you're subscribed with notifications on. The crypto market moves fast, and honestly, being first to the information can make all the difference in your trading results. This content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments carry significant risk, including the potential loss of principal. I may hold positions in the cryptocurrencies discussed. Always do your own research and consult with a qualified financial advisor before making any investment decisions. Past performance does not guarantee future results, and all trading involves risk of loss.